All right. Good afternoon, everyone. Please let us know that you're tuned in, turned on. You hear us all right. In a moment, you'll be able to see us. Giving you guys about 10-second warning here before we actually get started. Should be good. Right. You see the screen. It says Ultima alert. I like it. Fantastic. Looks like we're up and running over here. So welcome everybody. Hey, I'll even turn on the camera for right now. All right. By the way, I've got monitors all over the place. So if you see me randomly looking around, it's not you, it's me. I'm starting off on the wrong foot, right? It's not you, it's me. You know it's you. Okay. All right. With with that, so welcome everyone. My name is Don Kaufman. We're going to start here momentarily. So hey, you know what? Just for some fun here, chat in where you guys might be joining us from today. So there's webinar chat and there's question and answer. The webinar chat, I read both of them. By the way, everybody always asks me if this is live. It's live. Seattle, are you out of the cold, rainy stage yet? Oh wait, that's always. So I didn't say I wasn't going to make any fun of where you're from over there. Okay. There's actually, interestingly enough, a couple people from the Northwest. We got Oregon, we got Seattle, we got another Seattle. Okay. Yet another Seattle. Wow. Colorado, San Francisco. All right. A couple of people from California. So California's a big place, man. Where? I need to know. I did 7 years in California. I make it sound like I was doing time, man. I was doing time. So all right, Bay Area. Miami. All right, you win for the closest to me. Unless somebody's in Puerto Rico, you're the closest to me right now. So I came back out. We live out in St. Croix, U.S. Virgin Islands. I've been out here since Saturday. I'll be here now for 4 or 5 months. I'm not going anywhere. I've been to the real world. It's way overrated. Way overrated. So I go back and forth still. Oh, Beaverton. I've spent a lot of time actually in Beaverton, Oregon. I like it. I like it. All right. As I was saying, I spent a lot of time in the real world over the years. I'm out. I'm out of the contest. So a couple of Seinfeld references already before we've even started. This is good stuff. All right. So throughout the course of today's presentation, feel free to ask questions. And when you guys chat in over here, yes, I read it. Feel free to ask questions. I interact. Okay. Otherwise, this is going to be boring for me, for you, for everybody. I like to do this while the market is open because it's much more interactive. When I say while the market's open, like, look, I mean, I'll pull stuff up. I'm actually surprised that we're holding it together so well. Kind of thinking we come right back here to this 4106. Maybe it happens while we're live here in the next hour and 90 minutes or so. So welcome everybody. Again, my name is Don Kaufman. We're going to start here talking a little bit about Ultima Alert, high probability income generator. So this is a tactic, an entire trading genre I've actually been talking about for years. And one of the things that that comes up often, you're like, hey man, you've been talking about this for years. Yes, that's because it works. I don't I mean, I'll change things from time to time, there's no question about it. But when something is hot, when something works, you press. And that's exactly what we're doing. You press into it. So you're watching a TheoTrade presentation. Again, welcome everybody here. This is a quick risk disclosure. This is ours. This is not yours. The other thing is, we're not financial advisors nor a broker dealer. And I'm very thankful for that. I did spend 15 years in the brokerage world, professional trading world prior to that. I like this on the bottom, no soliciting, no recording, no photography. Don't take pictures. I think that might be for the live events, but okay, it should say don't feed the monkeys as well. Look, a couple of housekeeping items as we get started. Shut the door, turn off Skype chat. Here's the bottom line and why I put this up here. Look, I go through a lot. There's not a lot of hype in here today. I just go through a huge amount of material. I do every single time that I go through a presentation. The most important thing is the educational side of this. And, we're going to run about 90 minutes today. So look, you took the time to be here. This is important. Focus on being here. Get rid of the dog, the phone. Actually, the dog can stay. Get rid of the dog. Okay. Get rid of the kids. All right. Grandkids, definitely get rid of them. That's the best part of having grandkids, right? You can hand them back. Okay. can't do that yet. Mine are still young. Anyway, as I said, you took the time to be here. This is important. Focus on being here. Here's the auto expected move indicator. We use an indicator. If you've watched, look, any video from TheoTrade, and there's some people that are brand new because I'm reading through some of the names in here, and I don't necessarily recognize. There's a lot of people on, but I don't necessarily recognize a lot of the names in here. Okay, so if you're brand new here, as I said, I jumped through a lot, but the auto expected move indicator, there's an indicator that I mention constantly, like incessantly, to the point of like, why is he talking about expected move, expected move? So we give you a copy of this indicator for your own use. And it's a $500 value. If you stay with me right until the end of the webcast today, I'll actually give you a copy of that particular indicator as, again, our gift to you. Again, stay with me right to the end of the webcast, and I'll actually give you a link to it. And, I have a screenshot of it, but I'm much more into like showing this in the live trading application. But look, what the indicator is, okay, it's not like an overbought or oversold. It's what the option market handicaps forward risk to be. And to show you how effective this particular indicator can be, this line is the expected move. And this is on a daily chart, but I'm actually going to back it up. But you'll see the marketplace constantly riding these lines. And the reason it's riding the lines is this is where the risk happens to be. It's absolutely essential tool. If like there's a tool in the arsenal that you wanted to have in this marketplace, especially in a volatile marketplace, it's the expected move indicator. And that's why we provide it. It's our gift to you. Stay with me right until the end of the webcast. All right. This is why you're here. So we're going to talk extensively about Ultima, what Ultima happens to be. By the way, Ultima doesn't mean ultimate. That's not what it is. Ultima is actually a tertiary derivative. What Ultima basically means, it's like a volatility of the volatility of the volatility. Ultima is actually how we're making money right now. And that eludes some people. Trying to get centered on the camera over here. That eludes some people, but we'll explain it a little bit. So we're going to talk about Ultima and how to actually generate monthly income from Ultima. That's, first and foremost. We're going to talk about a couple of different trading symbols that professionals use, okay, be able to generate these trades. You're going to learn how and where to find edge as a retail trader. That's something, again, that eludes a lot of people. Like when I talk about edge as a retail trader, really focus on that. We're going to be talking about that in the next 5 minutes. We're going to talk about the reaping the benefits of high probability trades. So the types of trades that we're going to be doing are extraordinarily high probability. But more importantly and more appropriately, how not to take large losses when we're wrong. And of course, we will discuss what products work. When I say products, I mean stocks, okay? What stocks, what index products, options, futures, what works and what does not, okay? So I always like to emphasize, hey, look, this is what works, this is what doesn't. That's important. So here's a little bit about me, and I'm going to give you the like the nickel tour. Look, and I always start with this. I watched order flow for 15 years. And that gives me a pretty unique skill set. Some people have no idea what order flow happens to be. I'll come to that. So there are legitimately a handful of people in the entire world that get to see flow. Like what that basically is other people's trades. And I had that unique opportunity, and I'll discuss that again in a moment. So a little background on me. People come into markets in they come into markets from all different walks of life. I know there's people out there educating. They're like, I was a school teacher, and then I was a trader. I was a taxi cab driver, and then I was a trader. I was this, and then I was a trader. Look, I grew up in this business. I literally grew up in this business. I had an uncle that was a market maker. He started on the floor at the Chicago Board Options Exchange. He actually started on the CBOE floor, which is Chicago Board Options Exchange, right? CBOE, by the way, just had their 50-year anniversary. It was 1973. It was founded. He was there, mid 70s. He built from one seat on the CBOE. Within 7 years, he had 500 seats in exchanges worldwide. If you're anywhere in the Midwest, Chicago area, you've heard of the firm. It's called O'Connor and Associates. My uncle actually founded O'Connor and Associates, built the entire firm, sold it to the Swiss bank in 1992. It was a multi-billion-dollar deal. I grew up around it. I mean, as early as I can remember, we're talking about calls and puts. So I do have kind of a unique background in that respect. I don't even remember when I learned about trading. It's as natural to me as anything. So I grew up around it. In the late 90s, 3 weeks out of college, and by the way, here we are. So it was actually 1998. I'm going to have my, in just a few days, actually, my 25th year in trading. And that's in the professional trading world. So 1998, a few weeks out of college, I had a cousin that traded on the floor and invited me to join him. I was just going to work there for a few weeks during the summer. Next thing I know, I'm making markets, and they moved me upstairs as a risk manager for a private derivatives firm. A couple of years after that, I was invited by a couple of market makers I knew to a startup brokerage firm. The thing was called thinkorswim. I remember joining it, and I started talking to them in 2000, 2001. I joined full time, and it was like almost like a joke, like this thing called thinkorswim. Didn't know at the time, but it became the most successful, boutique options firm ever. The platform, obviously, thinkorswim, had a lot to do with, some of the technology, obviously, on thinkorswim. I also went on to actually build the entire education division of both thinkorswim, and went on to actually run education for TD Ameritrade and their 7 million clients. I was on the executive team of thinkorswim when we took the company public in 2007. I was there when TD Ameritrade acquired us for $600 million in 2009. Everybody always asks me, why did you stay on after that? You should be long since retired. I had a 5-year lockup clause. I stayed at TD Ameritrade until 2015, early 2015. I exited. Basically in 2016, we came out and launched TheoTrade. I'm not at the age where I'm ready to hang anything up. I already live down in, I guess I live in a place where people usually hang it up and retire, which is, I live in the Virgin Islands most of the year. I live in Paradise Valley in just outside Scottsdale, Arizona, the remainder of the year. I go back and forth, and I still work like a tremendous amount because I'm just not one of those people that ever hangs it up. When I talked about watching order flow, that kind of special skill set, look, one of the most, I think, insightful things, and I never realized it at the time, but one of the most insightful things is I got to see everything that you did for the better part of 15 years. Myself and our crew here at TheoTrade, we know you better than you know you. And I'm dead serious about that. We literally watched billions of others' mistakes, but have the knowledge of actually what works best for retail traders. By the way, when I say I watched order flow, I ran the entire education division. We had 768 people. Okay, in my last, organization, my last org chart had 768 people in the org chart. We know what works, what doesn't. We studied everything about retail traders. People think like, oh, TD Ameritrade, my trades just go through there. Yeah, they go through there. And then we have regression analysis and study every single thing you do. So we know what works best and what doesn't. We continue to study order flow even from afar at this point. By the way, if you ever need to get a hold of me after today, just go to support@theotrade.com. Put my name, Don Kaufman, in the subject. It'll go directly to me. We use a common inbox over there. Anyway, everybody okay with that? I gave you the kind of the nickel tour. That's me. I do TD Ameritrade TV at least once a week. I'm on TD Ameritrade TV. I will do CNBC from time to time, although I really don't enjoy doing too many of the TV appearances. I like doing stuff that's a little less formal, like, TD Ameritrade TV, but this is myself, put it against Kevin O'Leary. This is actually Investors Business Daily. I think a lot of people here are probably familiar with IBD, maybe even back to the days of William O'Neill. So in my 20s, I actually got to know Bill O'Neill fairly well. I was on the same speaking circuit as Bill O'Neill. Ironically, it was actually Bill O'Neill that introduced me to another gentleman who lives like right down the street from us here, another trader. That's how I ended up in the Virgin Islands, but IBD. And the reason I wanted to bring this is we took the cover, okay? Specifically, when I say we took the cover of IBD. And this is, and I know it's hard to see on here, okay, right there, whoops, I have the eraser, okay, right here. That is actually December 19th of 2022. So it was right at the end of last year. This has actually been the best year I've had since the financial crisis of '08. 2022 was an absolutely stellar year, and that's exactly the logic that I'm talking about today. So look, let's get down to business. Everybody good? Okay. Everybody good? Okay to go? Okay to go. All right. Let's start talking about some trading. Volatility. It's arrived. It's not going to abate anytime soon. One of the best things I can tell you is volatility is here. One of the worst things I can tell you, volatility is here. First of all, volatility, it's not going anywhere anytime soon, right? And you need to come to that conclusion in a hurry. For those of you that are, on your hands and knees praying every day that you found the next stock that'll go up, or you still own some Apple or something like that, it's all right. At the same time, you need to understand, okay, right here, right now, volatility is not going anywhere. Okay, volatility is not going anywhere. And that's an area that there's a lot of confusion around. Look, inflation's still technically red hot. It's nowhere near 2%, still pushing the rates higher. Look, Wednesday, they just pushed rates higher. They continue to contract the balance sheet. Strong dollar, even though the dollar's backed off, it's still an incredibly strong dollar, and geopolitical risks continue to proliferate. So what do you got? Look, you got game on. Embrace the chaos. What else can you do? Okay. What we're going to talk about today is a strategy that, look, we're not going to be talking a lot today about directional bias. If you are listening to this, if there's one thing, and I really do, like, I just believe this, I'm just telling you flat out, if you rely on directional bias, okay, you're in big trouble at this point. Directional bias basically means I got my MACD, my Fibonacci, my Bollinger Band. Look, we have some of the best, we here at TheoTrade have some of the best market technicians in the entire industry. We have, count them, 3 CMTs on our crew, 3 CMTs. Jeff Bierman is also a professor of finance at DePaul University. We have Corey Rosenblum, and we have Brandon Chapman. All 3 are CMTs, okay? That is not an easy designation to get. All of them would actually agree with that particular statement. For the most part, you can't rely on bias at this point. You're going to have basically embrace the volatility, embrace the chaos, and reduce risk while substantiating monthly returns. Okay, markets, they got real in 2022, and it's just the bottom line. Okay, what are we going to do with that? Well, we're going to embrace ultimate trades, embrace the chaos. It's all you can do. Higher volatility has resulted in significantly more options premium. Now, okay, this is a time where I say, oh, I said the options word. Look, I did say options. Options are okay. Is it okay to talk about options? For some of you that know nothing about options, okay, there's a few things I want to mention right here, right now. First of all, for today's presentation, you need not know anything about options. That's number 1. For today's presentation, you need not have a large account to trade options. That's number 2. Okay, for those of you that understand options, here comes number 3. Okay, sit back, relax. You're going to learn something here that you definitely, okay, are not aware of. I try to gear this presentation to kind of all sides of the spectrum. There's going to be something for novices, okay, something for those that are at the extreme level, and everything in between. Like, again, even those that have dramatic amounts of experience, what Ultima really is in the genre of trade, most people are not familiar with. They're just not. Like, nobody goes around and says like, oh, this is the way to be able to make money right now. This has been, okay, the hottest thing going since basically the onset of COVID. When the volatility picked up, it's on right now, man. There's a lot of edge in today's marketplace, and that's exactly what we're going to discuss. So higher volatility has resulted in more options premium. Ultimate trades are designed to sell options, right? So a lot of people hear this, and again, I want some feedback on this one. A lot of people hear through the grapevine that selling options is a great way to make money. How many people have actually heard that? Just a yes, okay, or no. Just a Y for yes, N for no. Come on, I have to smack people around a little bit here. A lot of people do hear that. And it's I always like to get people's feedback on that, because you hear it. But then some of you that are in here, okay, have actually tried it. And they go, yeah, I sold options right up until the point I got killed. Okay, because that's my next line over here. Okay, cue my next line. If you've experimented with selling options, you're going to know there's risk involved, right? So what happens to people that trade options, right, is they learn to trade options just a little bit, and then they hear like on some I don't know, Reddit board, you should sell options. Okay, you should sell. How many people here have heard of there's this big thing called zero DTE, 0 day to expiration. I'm going to tell you right now, I don't care what you've heard of that. That is disaster. Did you know there was a 3.5 deviation move, 3.5 sigma move the other day? It wiped out most of the 0 DTE. By the way, that's not me talking. Oh no, I actually have buddies that run the entire brokerage world. One of my friends runs Tasty Trade. The other one actually runs part of Charles Schwab. Yet another one actually runs Robinhood right below the CEO. And yet another one actually runs E-Trade. 0 DTE blew up big, big, okay, the last 2 weeks. That's not what we're here to do. We are going to talk about selling options, but what people do in selling options, they go make money, make money, make money, make money, make money. Bam! They get hit by a Mack truck and they go, oh, did you get the license plate? We're going to separate today myths from real risk, fact from fiction. We're just going to get right down to business, here on the logic, okay, of what works in terms of selling premium, okay? And don't panic. Do not panic. You can do this. Maybe you know nothing about options, okay? It's okay for today's session. Again, selling premium can now be done in small accounts under $5,000. So the other thing I wanted to reiterate this point, you can have an account as small as $2,000 and you can still get a lot done. In fact, I will show you an account throughout the course of today. I have an account that has $5,000. I'm only using 2,000 of it. And I didn't just sell some options. I sold a lot of options. So for those of you that are brand new, look, okay, grasp big concepts, probability, risk. Let's dive right into it. We good? Okay. Okay to go. All right. So there's a lot of facets when we talk about selling premium. The term selling premium freaks everybody out. What we're talking about with all of these, okay, are about selling options. That's what all these mean. Selling premium, credit spreads. There's bull call spreads and bear call spreads and bull put spreads and bear put spreads. Oh my, there's credit spreads and there's debit spreads. Okay, short call spreads, short put spreads, delta neutral. Delta neutral, most people don't think of, but it's often selling premium. There's selling naked. Okay, look, selling premium, you can actually be bullish or bearish, but generally are considered market neutral. Okay, and that's okay. All right, that's fine, you know. So selling naked, selling premium, all of these are the facets of selling premium, and we're going to cover that, right? Oh, you know, somebody was just saying like, you know, oh, I got beaten up. I sold options at some point. Look, this is in February. This is February of this year. Christian, okay, 100% agree. Spent the first 19 years trading without making any profit. Last year, joined TheoTrade, and I'm finally profitable. Don's Ultima strategy. This is exactly what we're going to be talking about today. Now dipping into Tony and Corey, okay? So I wanted to cover that. Here's another one. I'm predominantly following Ultima, okay? And my account's up 30%. Now I wanted to cover this one only because my account's up 30%. That was last year. And I'm like saying, look, it was November, it was late last year in November. And this gentleman is actually up 30%. And the reason I'm actually covering that is because you realize that last year most people were down 20% if you had the S&P 500. This gentleman had outperformed the S&P by basically 50%. Okay, profitability and probability. Okay, probability and profitability. The one thing that I really want to beat people up on for just a second, and please forgive me because this is a concept that eludes a lot of individuals, right? Is that I get emails every single day. And again, there's about 6,000 people presently on TheoTrade. That means 6,000 people that have access to the TheoTrade site. And we just get, you know, every single day bombarded with, you know, a few hundred emails. And these are of individuals that are not necessarily in the TheoTrade site. But one of the things that I try to mention, and I want you guys to know up front, is that how often you're right. When I talk about probability and profitability, okay, probability, a lot of people ask, okay, how often are you right in the market, okay? Well, I'm the first one to tell you, you can be right 90% of the time, but you can still lose money. Does that make sense to everybody? Because being right 90% of the time, because people literally, they'll sign up for websites. They go, look at this guy's track record. He's right 90% of the time. Did you ever think though that being right might not necessarily be profitable. It's what happens to the other 10% of the time that's going to define you, right? Probability alone does not make you profitable. You better remember that. Markets are always a trade-off. You could be right 90% of the time, you can still lose money. You could be right 90% of the time, and the other 10% of the time, a freight train just comes right over you. And what we need to talk about before we really dig deeply into Ultima is we need to talk about, okay, and again, I'm going to totally unload on you what Ultima is here. We got to talk about where to find some edge, an edge right now. Okay, edge right now. Everybody cool with that? So it's a very basic example I'm going to take you through. And I'm going to take you through this example because, well, it's right now how to produce edge. And I always use the exact same example. So it's a stock trading at $100. And we're going to talk a little bit about probability and premium selling tactics. So let me bring my little right on board over here for a second. Okay. So this is a stock trading right at $100. Now, do I own the stock? Okay. Just say no to stock. Okay. I do not own the stock. I don't want to own the stock. I don't have to own the stock. I don't own stock. And the reason I don't own stock is, this stock is capable of, like, it could jump up here, it could jump down there. You can get crushed. You just get crushed in the stock. So from the get-go, I want you to know, like, I'm not going to trade stock in this first example. I mean, stock's okay. It has its reasoning and it has its purpose, but in a more volatile marketplace, I suggest that we should probably trade options because the options will mitigate a significant amount of our directional risk. So in this first example, we're going to talk about an option. Again, for those of you that have no idea what an option is, we're going to talk about a 120 call. And in this first example, I'm going to buy that call for $1, and that's actually going to be a debit. Timeout, 120, all the way to 120. And by the way, I'm going to make this option good for the next 3 months. You ready? So stocks at 100, you have a 120 call. For those of you that have absolutely no idea what an option is, you ready? Here's the basics. A 120 call gives you the right to buy the stock at 120. In options, people try to make this business way harder than it needs to be. Educators do. Why? Because they want you to rely on their education, right? So they tell you that there's 500 different strategies. You got to learn an iron condor, and you got to learn a mambo combo, and you got to learn how to do this and that, and a diagonal, and a risk twist, and it gets insane. The number of strategies out there. Need I remind everybody in this business, what do you really have? You have calls and you have puts. Yes? Okay. What can you do with calls and puts? Well, you can buy them, okay, or you can sell them. That's it. There's your explanation of options. In options, we have calls and we have puts. We can buy it or we can sell it. In this example, we're just going to talk about a call. Okay, what can I do with my call? Well, I can buy it or I can sell it. You go, I can't sell it. I don't have the margin. From here on out, for today's examples, don't worry about margin. Assume margin doesn't exist. And of course, people are going to fight with me. They're going to be like, well, what about margin? And I'm going to show you how to circumnavigate that. Okay, it means get around the rules of margin. All right, so we're going to talk about a call option to begin with. We're going to talk about a call option to begin with. Okay, and we're going to go out there and we're just going to buy a call. Look, if you buy a 120 call, what do you really want to have happen with that 120 call? If you buy a 120 call, you want the stock to go above 120. Why? If it does go above 120, so the stock has to go above 120 and you're profitable, but it's not just above 120. You need it above 120 plus the dollar you paid for it. Look, a 120 call gives you the right to buy the stock at 120. Do you have to buy the stock at 120? No, but it gives you the right to buy the stock at 120. If the stock does get above 120, you have the right to buy the stock at 120. Could you buy the stock at 120? Yes, you could buy the stock at 120. And if the stock jumped all the way, let's say the stock jumped from 100, let's get crazy, and goes to 130. You have the right to buy the stock at 120. If you can buy a stock at 120 and everybody else has to pay 130, what's a 120 call going to be worth? What's a 120 call going to be worth minimum with the stock trading at 130? The answer is, survey says, $10. Now you paid $1 for it. I don't care about that, but it's worth $10. It's intrinsically worth $10. All I want to start with, okay, is this 120 call. And again, initially we're going to go out, we're going to buy the 120 call. Now, okay, what's the probability of getting all the way to 120? You guys tell me. You have a $100 stock. You have the next 3 months. Is there a good probability that the stock is going to go up? How far? Let me ask you, is there a good probability that the stock can go up, okay, greater than 20%? Anybody? Okay, I want you to feel the probability in this trade. I'm serious, okay? So I want you to feel the probability in this trade. What are the chances of the stock getting above 120? Okay, and the answer to that question is slim, okay, to none. You don't know what stock it is, and maybe you know something, but there's a very slim chance. So what happens most of the time? The stock stays flat, you lose your dollar. Stock goes anywhere down, you lose your dollar. Even if the stock goes up to 115, you still lose your dollar. Does that make sense? It's a very, very small probability, okay? But you have the next 3 months to sit there and go, I hope, I hope, I hope, I hope. You know what the interesting irony is? This right here is the trade that made money in 2021. People just bought out of the money calls and they go, I'm a genius. Okay, I'm a genius. I bought an out of the money call in a stock called AMC and GameStop, and I made a fortune. Now, unfortunately, okay, every one of those people ended up barfing back all that money and then some. In this case, we're not going to go out and buy the 120 call. In the next example, I'm going to use the same, okay, 3-month option. And I'm going to go out and I'm going to sell a 120 call. And for selling that call, I'm going to collect $1 credit. Now, time out. If I sell a 120 call for $1, how can I sell something I never owned? I'm selling myself into an obligation. If I sell a 120 call, I am obligated to give somebody stock at 120. Obligated to give somebody stock at 120. So if I sell a 120 call, okay, and the stock stays flat, what happens to the dollar? You guys tell me, what happens to the dollar? Right? So I sell a 120 call. And again, I want to give you the notion that if you sell a 120 call, you're selling yourself into an obligation. If the stock gets above 120, okay, you could get yourself in some trouble. We're going to cover that, right? But most of the time, what's going to happen? Stock will stay flat. What happens? You keep $1. Stock goes down, you keep $1. Even if the stock goes up, 115, you might wet yourself, but you're still going to keep $1, right? How do you actually lose money in this trade? Well, first of all, everybody's looking at this and they're going, that's horrible, man. You have to wait 3 months, 3 months to make how much? $1. You have to wait 3 months to be able to make $1. Like, that's the worst trade ever. I'm sitting through this seminar and you're telling me I have to wait? No, I'm just trying to teach you where edge is right now. I'm actually going to show you exactly where the edge is in a second. Okay. Could the stock go from 100 and go all the way to 130? It could. The stock could jump massively, but if it does jump up there, you have to give somebody stock at 120 and you go, I don't own any stock. Well, you have to basically do what? Buy the stock to give somebody the stock, okay? And that's not a good position because if you sell a 120 call and the stock's at 130, okay, you're going to lose $10 minus the dollar you initially collected. You're going to lose, you're going to lose $9. You lose $9 in the trade. You're like, I don't like it. All I want you to understand at this point, okay, and I'm giving you the brief and dirty version. All I want you to understand at this point, can you sell a way out of the money option? Yes, I can. Okay. Are you concerned about margin? Who here is listening is concerned about margin? The awkward quietness. Anybody here concerned about margin? Okay. Because most people say, wait a second, I can't even do that trade. My brokerage firm won't let me. Do not be concerned about margin. Okay. I like it. Okay. All right. Do not be concerned about margin because you can actually circumnavigate margin. There's several new products that literally forego the traditional margin requirement. And very few people even know what those products happen to be. We're going to get there. Before I go on, okay, why sell options so far out in time? Many of you have noticed in my example, I sold options a few months out in duration. Typically, traders like to sell shorter dated options. That's exactly why you're tuning into this webcast and why specific criteria is so important. What we do, okay, here at TheoTrade is we don't just sit here and like trade. We generate, okay, finite edge in the marketplace, edges that can be exploited by you, by me, by any retail trader. And when I talk about edge, we're talking about like mathematically looking at trades and saying, hey, if I did this trade, okay, thousands of times, which I personally have done this trade thousands of times, and I will show you, okay, all of the trades. By the way, these are not back trade. I don't believe in any of that. You know, people talk about like, oh, I paper traded, okay, and I back tested. I don't believe in the crap of showing somebody a back test. And I am very forthright. I don't care. Oh, well, I ran this data set and it back tested it. Let me ask you something, okay? You want to go out and risk your capital on some other, you know, person's back test? Because I sure as hell don't. And I'll do my homework, but I wouldn't risk capital until somebody's actually done it with their own money thousands of times, which I absolutely unequivocally have. One of the things I want to express here at TheoTrade, look, we're no holds barred, okay? It basically means this is all live trade, okay? These are positions. I predominantly, now there's a lot of positions in here. I predominantly trade on Tasty. I definitely use thinkorswim, okay? I do kind of go back and forth between the two, no question. Still like the charting. I'm not a big chart guy, but I really like the analytics. I like the analytics here on thinkorswim, okay? I do. I like the analytics in thinkorswim, but I like trading much better on Tasty Trade, and I do go back and forth. So when I say that we're no holds barred, we people will let you see everything, every position I've placed, okay? I don't care, P&L, okay? You want to see something, it's in here, okay? For better, for worse, every single position I may have on. And you look at the size in here, there's nothing big, okay? I got nothing to prove. The other thing is, these are portfolios that you can follow. Okay. And if you want to do more, you can absolutely do more. These are portfolios that right now, okay, there's over 6,000 individuals following into these portfolios. So it's critical that we know that. Again, totally no holds barred. When I say that people follow these portfolios, like if I were to go to here, this is a 46.25 call, just make a quick point. I'll show you this again in a few minutes. Okay. When I do a trade, look at the contract size there. Notice anything interesting about it? Yes, the contract size over 1,000 contracts. Okay, why is that the biggest open interest? Okay, because that's a trade that we did. People follow the trades, and that's a very, very small portfolio. That's not one of the big portfolios. You want to see one of the big portfolios? Oh, for that, I think we have to go to like maybe something like XLY. Okay, this is a much bigger position. Okay, if I look at this, yeah, see the open interest in here? That's us. It's 3,000 contracts. Okay, I say this, look, you can see the position. There's no if and or but about it. When people want to know, like when we trade, okay, we're as big as any institutional trader on the street, bar none. In fact, we're larger in most cases. So it is, again, this is what we do here. Look, when you guys think about options, but most people say, well, options decay like this, right? Okay, how many people have seen a decay graph like this, right? By the way, somebody said, do you have a portfolio you manage outside of these accounts? Okay, bigger size. Yeah, no, so I actually have size in these portfolios, meaning that I manage these portfolios, but my size is actually, yeah, it's in there. It's tacked in there, but you're just seeing like, you know, the model portfolios. That's actually absolutely correct. I do that. Most people probably have seen this decay graph. You guys want to see something that'll really shock you? Okay, check this out. What if everything you've learned about option decay is wrong? It's a fair question. What if everything you've learned about option decay is wrong? Okay, would you start listening at this point? You probably should. Let me show you something that will astound you. We're going to go to the spiders. Why am I going to the spiders? It's just like one of the most prolific products. I always use the spiders for this. Okay. I always, okay, use the spiders for this. And the reason that I use the spiders is it's again, like everybody knows the spider. Here, I'll tell you really why I use it. Look, under option statistics, today is a nothing day and it's already traded 4 million contracts. Okay, on an average day, the spiders do almost 10 million contracts a day. It's the most prolific product in the entire industry. I'm going to go out 105 days. You know why I'm going out 105 days? Because it's going to aggravate you to no end. Because what do you think? You think options 105 days out don't do what? They don't decay, man. Okay, I'm actually going to show you, right, an eye-opening little event over here. 105 days out. Okay. Follow me. We're going to go way out of the money, just like I did in my example a moment ago. We're going to go right to here. Okay. Do you see this option? It's the 455s. And again, I'm going to write it up here because I want you not only to see it. Okay. I'm going to execute into this thing. So here's a market of 98 at $1. I'm going right to the 455s. So bear with me as I'm going to show this to you. I'm going to go out in this example. Okay, I'm going to write it right up here so that everybody can see it. And I want you to know exactly what I'm going to do. I'm going to go out and I'm going to sell the 18th of August 455 call. Okay, C stands for call, and I'm going to sell it exactly for $1. That is it. Thank you very much. No, like I like doing that because, like, all right. So, question is, could I actually get filled at $1 right now? No, the market's 97 at 99. Okay, but I can come in here and I can say, look, I'm going to route it at $1. I am going to route it at $1, and it's dollars outside of the scope of this. But here, let's just go out and try to sell it. Am I going to fill? No. But if the market just pops up just mildly, okay, I will fill, and you'll see it. If I fill, I fill, right? But I'm just going to get, rambunctious on this particular example. I'm going to try to sell something for right at about $1. Now, time out. Then what do I do? Okay, and I really want you to think about this. So let's assume that we went out and we sold a 455 call. Now, please do not try this at home, because this is all I'm trying to do is teach you conceptually what Ultima is about. I got to teach you conceptually what Ultima is about. Ultima is about the volatility, the volatility, the volatility. That's what Ultima means. And Ultima is about a significant decay rate, boom, okay, not in time, but in volatility. And you go, oh, that might be interesting. Okay, Ultima has to deal with, look, short duration volatility is like nothing. It's like, 15%. Longer duration volatility is much higher. Okay, so I'm going to go out and I'm going to sell the 455s. And then what am I going to do? I'm going to sit there, okay, and do nothing for how long? 105 days. So it's going to take 105 days to make a full $1. How's that sound for a strategy? You go, that is the worst thing I have ever heard in my entire life. Like, they're like, I don't like you right now because that is the worst thing I've ever heard in my entire life. The point that I'm trying to make here, we're not actually going to sit here for 90 days. Okay. The whole goal that I started with today is I want to make money every month. How can I make money every month? I can sell options that are way out of the money. Look how far out of the money we are. We're way out of the money. We're in the nosebleed seats here. I'm almost 50 points out of the money from where we presently are in the spiders. Okay, but here's the key to it. I'm only going to hold this trade for maybe an average 30 days. That sound reasonable? And in 30 days, okay, here's what I want to do. In 30 days, I want to make 50% or more. Is that possible? You guys tell me. Okay, those of you that have been to this presentation before, you don't ruin it, man. Stop ruining it for everybody. Okay, but is it possible to make more than 50%, okay, in 30 days? And you're like, well, what are you doing? Well, all I'm doing is selling options that are way far out in time, because everybody says, well, I want to go out and I want to make money, okay, every 30 days. And I go, okay, that's fine. You can make money every 30 days. So, well, what's the strategy here? Like, what are you doing? Okay. And the answer to that is, I'm showing you right now. Okay. I want to make you like more of an inventory manager. I want you to go out and I want you to think of this as inventory. And we'll talk about that. Like, if you opened up like an Amazon business, what's the key in Amazon? Okay. The key in Amazon is like, not that you're just making money. It's that you're making money and doing it again and again and again and again and again. And does making money, like selling crap on Amazon, have to be exciting? No. But you know what? It still makes money, right? So I'm going to go out and I'm going to sell this option, and I'm going to sell it for exactly $1. Then what I want you to kind of like rationalize is this. This is kind of a weird example. If I sell something with 105 days, I want you to fast forward, okay, basically a month. So what I'm going to do is I'm going to open up this July 21st options. Now, time out. This is very confusing to people, because if you've never traded an option before, what I'm showing you is this. I'm going to look at a 455 call right now. And then I'm going to look at a 455 call with 77 days left. How much time is between 105 days and 77 days? How much time is between those? You guys tell me. How many days are between 105 and 77? You don't have to use a calculator. I promise. It's 28 days. Okay. If right now I just opened up these July 21st and I just looked at The 455s, what are they trading for? 34 cents. You're like, holy crap. So 28 days from now, assuming all other factors being held equal, okay? 28 days from now, I can buy these 18th of August options back, those 455 calls, and I can pay what? Let's even bump it up a penny. I can pay 35 cents to get them back. What do I make? Okay, 65 cents. I make 65 cents, which is it greater than a 50% return inside of 28 days? Yeah, it is. And now I haven't even talked about market movement. The market can go up, the market can go down. That's not going to make a difference. And I'm going to tell you exactly why it's not going to make a difference, because that's not the only trade we're going to do. Okay. Are you interested now? In 28 days, you can make more than 50%, more than 50%. You don't basically do anything. It's pretty straightforward. And yet, why is this missed by a lot of traders? Because a lot of traders, they're all infatuated. Look, trading to me is never about like, like, oh, I love this and I love this. I don't give a crap what you like. It just doesn't matter. I don't care what other traders. Oh, I really like my 618 Fibonacci. I like it. You know what I like? Making money. And I really don't care where you do it or how you do it. So somebody says, well, are you making money every 30 days? Okay. Well, yeah, I am making money 30 days. But instead of riding, okay, the wild pony of 0-day expiration, which is sheer madness. You know why people like 0-day expiration? I'm going to tell you something. It's the brokerage firms. Anybody that likes 0-day expiration, okay, is either in bed with the brokerage firms, working for the brokerage firms, and has something to do with the brokerage firms. Because why do you think they want you trading 0-day expiration? Because it makes them a beep load of money. Yes. Think about that for a second. So everybody that's in that, you see like YouTube videos on this stuff, sponsored by, okay, look, we are marketing partners. We're marketing partners with TD Ameritrade, Charles Schwab, okay, Tasty Trade, okay. We are marketing partners with E-Trade. We're marketing partners with Tradier. I don't care. We have all the brokerage firms, okay, that we're marketing partners with, but I'm not going to sit here and tell you something that's not going to work, because the only reason that we have great marketing partners with those brokerage firms, because our clients actually survive, our clients make money. It's all that matters in this business. It's all that matters. I don't care how you do it, okay? Trading, it should never be like heart pumping. It should never be exciting. This crap should be boring. It should be just relentless. You should be like, oh, this is like watching paint dry, but it should work. I know that doesn't sound exciting. I don't really care, because it works. You're looking at an example here where I just made over 60% for doing absolutely nothing, but we still have to reduce our risk. And we're going to get there in a moment. By the way, I want to show you that this is repeatable. You don't have to do it here in the spiders. Let's go to the Q. By the way, I like ETFs. I'll go to the QQQs and I'll do the same exact thing in the Qs. I'll go out here 105 days. I'll go way out of the money. The QQQs, right? The Nasdaq. Nasdaq is scary. Okay, here, let's use an option right around $1, right? So here's an option, okay? What is this? All right, this is the 369s. So look, even if I whack this right now, when I say whack it, I mean hit it. How the hell do you say it? If I sold it, okay, whack the bid, sell the offer. I've been trading for too damn long, okay? Want to see something fun? I'm going to come in here. The market's 95 at 99. Do you think I can change that market to 98? Watch this. Go in there. I'm going to change the market to 98. You go, how did you do that? Okay. Oh, look, I changed the market to 98. That's because I'm the best offer at that time. Watch, cancel the order. Cancel the order. Are they going to leave it at 98? No, they leave it to 99. Are we having fun yet? Okay. Are we having fun? So let's come in here and do that again. Let's come in here and say, look, if this market's 95 at $1, market's 95 at $1, okay, now I'm going to come back at 99. Ooh, I'm going to come in at 99 and I'm going to change their market to 99 now. Huh? Look, it's going to change to 99. You're like, holy crap, that's cool. Okay. Want to get a better fill? Look at this. I'm going to come in now and I'm going to cancel, replace the order. I'm going to change the market again to 98. Now we're having fun. Okay. Market's now 98. He fills. So, all right. I just filled that one. So I just went out there and sold something for 98, but I want to actually have fun with this. And I want to show you, look, I can actually create a opposite order. Okay. and try to buy the market back. Okay. And obviously after commissions and everything, I wouldn't be too thrilled with this trade, but okay. And just this little oscillation of the marketplace, I'll try to buy it back for like 96. Okay. I'm just playing around. Anyway, I just sold something for literally, here, let's use my example. I sold it for 98. In fact, I'll leave this one on. I actually don't mind this. It fits my position. So I sold something for 98 cents. Okay. If I sold that for 98 cents, let's put that up here, right? Sold. Okay. What did I sell? I sold the 369 calls. What did I sell them for? Okay. Again, here, I just want to make sure everybody saw it. Right down here, I sold them for 98 cents. Sold them for 98 cents. If nothing happened in the market, something will happen, but if nothing happened, what would those be worth? Okay, scrolling, keep my chickens scrolling. Here we go. They'll be worth, I could probably buy them back for about 33 cents. So exactly a month from now, I can turn around, I can buy them back for 33 cents. Survey says, winner, winner, chicken dinner. It's fine. Okay, that's fine. That's only 28 days. That's in 28 days. I'm making like what? Between, it's over 50%. Okay. In the worst of markets, it's about 50%. In the best of markets, it's closer to 70%. So that's literally what I'm doing here in a very short amount of time. Okay. Now with that, okay, somebody said not 28 days, but it is 28 days because I'm just going from 105 to 77. Okay. That's what we looked at, right? Okay. I want to make sure that you see that, right? Yes, I understand that it is May. Okay. But I'm only holding this 105-day option for 28 days, right? If I sell a 105-day option right now, I sell a 105-day option, which I did. 28 days from now, the 105-day option will only have 77 days remaining. I will buy it back at that point. I will make greater than 50%. Yes? Okay, make sure that we're good. Okay, I know it's May. I am here. It is Cinco de Mayo. Making sure everybody understands this. Now, where is there to go from here? As I said, you don't believe in this anymore. Why? Because we're not trading on standard decay. We're actually trading on Ultima. That's why it's called Ultima, because Ultima is the volatility, the volatility, the volatility. Now, here's the good stuff. I just got the right question. Somebody says, oh, but the margin's ridiculous. Okay, okay, the margin's ridiculous. The margin is ridiculous. Okay, by the way, we're not selling the June. We're selling the August. Okay, if you have 105 days, after 105 days, 28 days passes. Like right now, you sold the 105-day option. Take 105, subtract 28 days, you're going to be left with 77 days. Okay, doesn't matter how you look at it. There's no special secret sauce over here. Okay, time moves forward. 105 days is only worth then 77 days. You close the position. You close the position not when it gets near expiration. You close the position with 77 days left. It is what it is. Okay, how do you get around margin? You guys want to see how to get around margin? How many people are interested in getting around margin? Me. Okay, how do you get around margin? Trade options and futures contracts. Options on futures contracts. You go, whoa, I don't understand. Options on futures contracts are the exact same things as spiders. They're the same things as spiders, but they actually came out with a new contract called the micros. So for years and years, we've actually had a contract that it was called, okay, a mini contract, like what they call the E-mini, right? Now they have the E-micro. Why do I care about micro? Oh, because the rule is now you can have $2,000 in your account. You can do whatever you want. It's going to tie up negligible margin. Okay, without going into too much detail, I can actually go out and sell options naked. It won't tie up more than $700. Okay, and here, this is where I say no holds barred, people. No holds barred. This is one of my accounts. This is actually one of the portfolios, okay, that I manage. And in this particular portfolio, look at the micros. See these micros? Those are micros right there. These are naked. These are naked. Now they have hedges on them. Hedges mean I have risk reduction on them. Okay. But I want you to see the margin. I didn't sell one. Okay. I am short. And again, this crap's important because people like immediately balk and they go, I can't do this. Okay. By the way, you can do it in an IRA too. So I Can't do it. What can't you do? That's a 3 lot. I'm short 3 there and short 3 there. I am short puts and I am short calls, right? And I'm short a 3 lot. What's the margin? $2,400. You go, but I don't have $2,400. That's a 3 lot. You could do a 1 lot. Be Captain 1 lot. You can run around with like a little cape on you. Captain 1 lot rides again. So why am I? Okay. I filled. I must have sold the call on the I must have sold the call on spiders. So anyway, Captain 3 lot over here, I can trade 3 contracts. And don't for a second say, oh, that's a really small. It's not a small trade. It's not a small trade. Okay. This crap actually works. This crap actually works. And look where I am, 105 days out. Huh. You know what? You can look at any of my accounts. You're going to see the same damn thing again and again and again. Okay. Expecting, okay, what? Good results. I got positions here in the big ES. Look at these. They're 105 days out. I got positions in the small ES. Look at these. They're 105 days out. Okay. I have what we call inventory. What's inventory? All right. I've actually got inventory stacked all over the place. And that's exactly what I'm going to show you. Just on the MES, look how many trades I have on one product. Okay. Why do I have so many trades on one product? Because I've actually built inventory. I've layered things on. I'm in the inventory management business. And I'll tell you right now, this stuff works. Okay. This is what works in this marketplace. We okay? It doesn't tie up a lot of margin. So I will say again, you can do this with a $2,000 account. You can do this in an IRA. All right. In fact, one of the accounts you were just looking at a moment ago is an IRA. Here, can't make that one up. You want to see my IRA? I have one right here that I am actually trading in the IRA. Okay. And you go, well, how do you know it's an IRA? Here, I'll show you how you know it's an IRA. If I come over here to review and like send, that says SEP. There's no paper trading over here either. That's a SEP. That is an IRA. Okay. Account numbers, everything. As I said to you, here at TheoTrade, everything we do is no hold barred. I want you to see everything. If I'm not willing to execute into something and if I'm not making money, okay, then all this is for nothing. Like, you people want to learn to really make money, listen. Like, this business, okay, doesn't really change. This business just, you have to find new ways to get edge and not get your head taken off. Like, it's volatile out there right now. You shouldn't be screwing around in short duration options because you can get ripped apart. That's all that brokerage firms want you to do, is screw around in short term options because you actually generate trades. How do you think a brokerage firm makes money? You think they're making money on the interest right now? Okay, Charles Schwab lost $20 billion. They're sitting on a $20 billion loss in interest. Only way Schwab is making money right now is you trading. Do not forget that. Now, back over here, okay? Look, I'm doing trades that have a 90% plus probability. In fact, okay, the trades that we're doing in the spiders, the one that I originally brought up with those 455s, okay, let's go take a quick glance at them. I'm pretty sure, yep, I filled. Right? So as I said a moment ago, I'd likely fill. I filled right there. I filled, and I filled, okay, at $1. So I filled that thing at $1. Now what do I do? Well, I got to wait, not 105 days. I'm going to wait 28 days. Okay. But in this trade, okay, what's the probability in it? And the answer to that is, I'm going to come over here, probability of it being out of the money. This trade has a 90, almost 3% probability of making money. That's probability calculus, not mine. It's, on the platform over here, it's probability of falling out of the money. The probability is about 93%. And what happens with these trades is 90% sounds great, but 10% of the time, the market just whoosh, rips your face right off. Okay. This is what we have to worry about next. All right. When you trade high probability strategies and you're wrong, you get hammered. And this is exactly what many of you have done. Okay. Many of you have gone out and you've used strategies like iron condors. How many people here have ever done an iron condor? Anybody? Anybody ever done an iron condor? For those of you who have no idea what an iron condor is, seriously, don't worry about it. You sell a call, you sell a put. Okay. You sell a call, you sell a put, you buy a call, you buy a put. Okay. You do the hokey pokey and you get blown up. It's lovely. So people in iron condors, they make money, they make money, they make money, and all of a sudden, boom, train wreck. And the marketplace is so evil. Like, the marketplace actually lets you make money for a couple of months. It's like, come on, come on, come on. And all of a sudden, bam, you get hit by the train wreck. Like, I didn't know and you end up losing not only the money that you made in the previous like 5 or 6 months, but then you end up losing like 50% of your account. You're down to like a couple $1,000s. All right. You're like, it's absolutely brutal. And people go, holy crap. It's like I could see your account. I could for 15 years. I know everything that you guys are going to do. Like, I'm serious. I see everything that people have done, are going to do, have thought about in this business. This business is not that hard. There's calls and there's puts. And I just, at some point, like the frustration starts to get to me because people can do whatever the hell they're going to do. Okay. And I ask you again, you just want to learn to make money? I don't mind asking that question, because, or do you want to learn like some crap that, like, oh, this sounds exciting. Shouldn't be exciting. Should be very routine. Okay. It should be going out there, selling some crap, managing it, getting out and getting profitable. What else? By the way, after you do this, this is the way people learn. They make money, and just get smacked. And then they paid $500 to learn how to do this. They took a course, they paid $500 to learn how to do this. And then they pay another $500 to go, I can fix it. I can fix it. I'm such a cynic about fixing stuff. Everybody that ever tried to fix a trade, everybody that ever tried to fix a trade, you know what happens with fixing trades? That there's no way to fix without adding more money, okay, to an already losing trade. So fixing is like this really degenerative word, because fixing is going to add more risk to an already losing trade. And the first thing you learn in this business is don't fight the market. Don't, but nobody ever calls it fighting the market or averaging in, or okay, what they call it is like, no, you're learning to morph the trade. You're fixing it. It's an amalgamation of crap. Look, if you take a car and drive it off of a cliff, okay, take a car, drive it off a cliff, and then bring it to a body shop, what are they going to tell you? I'm serious. What are they going to tell you at the body shop? They go, I'm going to say that car is a piece of crap. Let it go. There's nothing left. Go, I want you to fix it exactly like it is. They go, you realize it's a $50,000 car. It'll cost you 60 grand to make it look like it was a $50,000 car. You sure you want to do this? You go, oh, that's the car for me, baby. That's the car for me. Oh, and don't worry about the burned seats. Just make them better too. Look, you can't do it this way. You got to do this right. You got to actually learn to sell premium the effective way. So now we're really going to talk about what I term kind of like the full Monty, if you will, of selling premium. Okay. What we are going to do is much more about the inventory management side of the business. Okay. Because we have to learn how to control risk. We got to learn to control like volatility, because sooner or later, let me be very forthcoming with this. Sooner or later, okay, see these S&Ps, okay, wait for it. The last 10 years, S&P go like this. Eventually, it's going to go like this. How many people would agree with that statement? Okay, or the what goes up is eventually going to come down, and you don't want to be the part where it comes down on top of your head. And you're thinking maybe last year was it. Look at that. You know what's even better than that? You got to look at stuff like the Qs right now. Ai Chihuahua. That is scary. It's just scary, because it's just straight up and then straight down, and it goes like this, and then oh my gosh. I mean, it's chaos out there right now. And if you look back, and by the way, this is the entire QQQ. Okay, this is something wild. Like, see, people forget about this crap. They forget about it because right here, this is actually the internet collapse. You do realize in the internet collapse, we went up and we came down, and then we actually went back up, and then we came down really hard. That was the best part of it. By the way, it took like what? Here starts the unwind. It was 2000. This is March of 2000 into the rest of 2000 and 2001. And then things got really bad to 2000. I mean, this was years. It was over 2 years of a collapse before we actually started to rebound. And then just when you got your feet back under you, bam, they hit you again. Okay. You have to understand, this is actually the fun of the marketplace. By the way, I started trading. Okay. And I'm not trying to date myself. I started trading just before this. Okay. Just before the big upswing. And the first place I traded was Yahoo. I started trading Yahoo in 98 at the SIBO. And that's where I learned, okay, with a gentleman that still works over at TD named Steve Rashes, okay, who I originally worked with. Anyway, onward and upward over there. Look, we're going to teach you to sell options the effective way, because the thing you have to understand about this business is it's an inventory management business, right? So if you go out right now and you sell. Okay, we were in the SPY, and the SPY was trading at like 410, and you go out and sell. What we were selling is a 455 call. Okay, and you collect $1. You can't just stop there. You just can't do that crap. Like, now what do I do? Like, you just sit there and you're like, you can't do that. That's not going to make you enough money. So I'm looking for something over here to explain this. Damn, okay, I don't have anything good to explain this with. I'm looking for something to here. Okay, this is a roll of tape. It was the only thing, okay, not strange within reaching distance or not an expensive item. I've got a lot of electronic items in here, but okay, I don't think an iPhone is probably great explaining it. Okay, my wife's definitely not going to explain it on there. Anyway, this is a roll of tape. Okay, imagine you could take this roll of tape and you could go out there and you could sell the roll of tape. Just bear with me on this thought for a second, because I think it'll explain this much more effectively. You can sell this roll of tape, okay, for $1, all right, on Amazon. And people are going to buy it like crazy, because selling a roll, this is a nice roll of tape. These stupid things probably cost $6, $7, but I figured out a way to be able to sell them for $1 on Amazon. And after I sell them for $1, I can turn around and buy them for 50 cents. How many, okay, rolls of tape would you like to sell? And the answer is a lot. As many as you possibly can, as many as you could even fathom, because at that point, it's not about the roll of tape. I don't give a crap what I trade. Do you guys not get that? Like, I don't care if it's a roll of tape. I don't care if it's a pen. I don't give a crap. If you can sell something for $1 and within 28 days buy it back for half, right? So I'm actually selling stuff and shipping it out for $1. And on the other hand, I'm actually buying them, okay, for what? For half that price. How many rolls of tape would you do? And the answer is as many as I possibly could. Does that make sense? As many as my capital will allow. And that's exactly what we're thinking about in here. So when we're going to go out, we're not just going to sell 455. Then we're going to turn around, okay, we're going to sell some puts. I might be able to sell like 330 puts. By the way, the puts, trading for twice as much, trading for $2. And believe me, don't take my word for it here. Let's go look. Okay, what are the puts trading for? 105 days out. Let's go 105 days out. Let's go into the SPY. Okay, go into the SPY. Spider. Let's go 105 days out. And I want you to look at the puts. I want you to look over at those puts, and here, I like my little delta up here. Delta. Oh, there they are. They're trading for $2. 7 deltas trading for right around $2. Look at that, 330s. Yay! It's like I've done this once or twice before. So I'm selling these for about $2, $2. So now what I'm going to do, okay, is, and again, I want you to see where the spiders are trading, okay, before I go on, because I'm actually going to teach you the full Monty over here, trading about 411. That's fine. So the SPY, all right, SPY is trading at, let's call it 410. I'm just rounding. I'm going to go out and I'm going to sell, okay, 455 call. I'm going to collect $1. I'm simultaneously going to sell the 330 put, which, by the way, I actually literally am short these already, and I'm going to collect $2. Time out. If I sell a call and sell a put, how much margin is going to be held? Well, the market can only go up or down. It can't go, it goes both ways. You go, what if the market split? The market splits, it means the shares go down the middle. It doesn't mean the market goes up and down, okay? You're thinking about that one for a moment. Anyway, the market can go up or down, so it only holds margin on one side. So this is like basically being able to buy multiple rolls of tape or even a discount, because it's not tying up any more capital. But I'm not going to stop there, okay? Then before you know it, the market moves up a little bit. If the market moves up, I might be selling like 340 puts, collecting $2 for those. And then the market moves up here a little bit. Might be selling, for instance, 465 calls, collect $1. Before I know it, I'll be selling, for instance, the 450 calls, collect $1. Okay, and down here, maybe the market sells off. I might be selling 320 puts, collecting $2. Time out. What's wrong with this picture? So all of a sudden, I've now sold inventory. I got inventory on. Okay, remember a moment ago. A moment ago, I was actually showing you my Tasty Trade account. What was I doing on Tasty Trade? Okay, that was just one position, but dun, 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 dun. What was I doing on Tasty Trade? Look at all the sales. Look at my spider position. Woo! A 1 by 3 by 4 by 5. Oh my. Okay. Look, I'm never going to talk about trades that I don't execute. I'm never going to talk about trades that I'm not putting my own capital at risk in it every single time with you, right? These are the portfolios, and you'll learn about this in just a moment. All I'm doing is going out there and selling premium. What's wrong with this picture? What's wrong with this picture? Sooner or later, okay? Sooner or later, what's the marketplace going to do? By the way, 105 days is not always the end all be all. We'll come to that in a moment. Sooner or later, what's this marketplace going to do? The market's going to rally up huge and kill me, or the market's going to sell off huge and kill me. Just like if I were in the tape business, can you imagine if I were Don the Tape King? Every time I go out and sell a roll for what? For $1, and I'm buying all these rolls for 50 cents, sooner or later, what am I going to have to do? And I'm serious, like in the literal sense. What would I have to do? I'd have to incorporate myself. I'd definitely have to hire a couple of employees. I'd have to have insurance. I'd have to have health insurance, okay, medical insurance, liability insurance, ridiculous insurance, hurricane insurance. That's right. I'm on a freaking island, shipping tape on an island. So I'd have to have all these types of insurance over here just to be able to operate. And that's actually true in here as well. You don't have to hire anybody, but you do. You do absolutely. You have to do which we call hedging. Enter people, enter the hedges. Okay. You can't survive without hedges. I can't survive without hedges. There are 3 primary hedges. That's a 2 over there. The hedges are as follows. Okay. The type of hedges we use, RTS, which stands for risk twist. The next hedge, okay, is a VIX vol spread. Okay. The last hedge over here, gamma iron. Okay. Those are 3 types of hedges. What do the hedges actually do? The risk reduction. What are the hedges going to cost? Negligible. I'm actually going to show you a hedge in a moment that costs 0. Okay. What is a VIX vol spread? I think the VIX vol spread is the most easy hedge to interpret, and it's the one I'm going to use for an example. Okay. Sooner or later, the market's here at 410. It could crash. And if it crashes and crashes incredibly hard, you're going to get toasted on the 340s, the 330s, the 320s. You're going to get smoked and you're never going to recover. And this is actually what happens to people is they make money, market just punches it. Okay. And like the old saying is everybody has a plan until they get punched in the face. Okay. You have to hedge. And if you don't, this ain't the business for you. Okay. There has to be some risk reduction methodology. It is going to be a nominal fee. But you know what? If you're in business, in any business, you have to have hedges. In every single business, they have hedges. Okay. And I know that people are like strained to think about it. Okay. You have to have insurance. You have to have employees. You have to have this. It's overhead. Hedges are overhead. You have to look at hedges as like a sacrificial lamb. If you lived on a little island, okay, with a volcano, and you had to walk up there every 6 weeks with a little lamb, okay, eat the lamb, okay, eat the lamb, volcano. You throw the lamb into the volcano and you go, oh, now the volcano will be happy. That's what this VIX vol spread is. Right here, right there, I am actually going to position what is termed a VIX vol spread. What is a VIX vol spread? For those of you that know what the VIX happens to be, what is VIX? The S&P 500 volatility index. So I'm going to put this tiny little trade on called the VIX vol spread. What's going to happen? If the market comes crashing down, where does VIX go? Okay. Where's VIX go? When the market comes crashing down and the market like legit has to crash here. Like if it go to 410 all the way to 340, gotta crash. Like that's serious crap. It's like a 20-25% crash. The VIX is going to go kaboom. And as the VIX explodes, okay, so goes your little trade. And your little trade winds up to be a huge profit and does what? Actually gives you what? It's like a parachute opening, okay, and allowing you to sustain these positions, okay? The same is true on the upside. On the upside, we actually use what's called a gamma iron, which is a buy side strategy to where we rally and rally huge. We hit the upside of the gamma iron before we could ever touch your inventory over here. The VIX vol spreads, they're essential. Can't survive without them. In fact, I've actually got, you can see in this inventory, look, there's a VIX vol spread right here, okay? That's a VIX volatility spread right there, where I've actually bought a 10 lot of calls, okay? Why? Because if the market crashes, my VIX vol spread is going to explode in value. A 10 lot on calls, that little trade that I just showed you there, okay, can make as much as $6,000. What did I pay for it? Zero. I literally filled the trade for zero. Okay. And again, people go like, no way, you can't get a trade for zero. Of course you can. All right. We're going to go in here and we're actually going to look specifically at VIX. Okay. I know there's a lot of crap on here. See the VIX trade? I apologize. The VIX trade is done for a 7-cent credit. I got paid for the trade. There's risk in the trade, but I got paid for it up front. So don't ever tell me that you're going to have to pay for a lot for your hedges, because you can get hedges. Okay. On the down low, it's not going to cost you much. This, people, is inventory management. And it looks like a lot, like, and you're like, oh, and he does this and he does this and does this. Look, in the end, I'm selling rolls of tape, buying them back cheaper. Okay. The VIX vol spread and stuff, it's just, it's fodder. You just learn how to do it and you just execute upon it. Okay. You learn how to do it and execute upon it. But like, people, I can't stress to you enough. Look, this is what you want to do. This is why you want to sell premium. You're going to need this in your life. I can't tell you, there's times in my career, again, I'm coming in just the next few weeks. I'll have my 25th anniversary in this business. I cannot think of one other time in my entire career, okay? Not even after like September 11th, not coming into the financial crisis. I can't tell you another time in my entire career that we had more uncertainty than right now. The one certainty in this business is the volatility ain't going away. You're going to be like this for years. I don't care whether we rally off, sell off, it's not going to make a difference. Volatility is going to be here for years. There are so many macroeconomic issues. There are so many geopolitical risks. There is so much in terms of technology, everything from AI. It is completely overwhelming. You got to forget. You got to let go of whatever you think. You just got to go out and sell some premium and manage that risk. Okay, you could be wrong on market direction. You never need to buy or sell the stock. It's got a high probability of success. Most of the time, you're not going to need the VIX trade. If you do need the VIX trade, it's going to be crazy. Produces positive decay, all right? And you can do this in a small account. Look, selling premium can bring in really consistent returns, all right? And we're going to actually discuss the right way to do this. But before I do that, I'm going to show you live trading examples. Look, variations of all of the trades that we've showed can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts. But before I go any further, okay, it is also imperative for you to understand we have made dramatic shifts specifically here at TheoTrade. For those of you that are familiar with TheoTrade in the past, okay, we are an educational venue. We have now gone out, like I just recognized in the last 2 years, there is time for you to learn how to do this. Would everybody agree? Okay, I mean, there's time for you to learn how to do this, but the problem in this marketplace, when I say there's time to learn this, it takes time to learn how to do this. It takes time to learn how to sell here, sell there, put a hedge on here, okay, a little more there, dial this in here. What we've basically done is we've shifted dramatically, knowing this, into alerts. Everything I'm showing you right now, okay, can be done through alerts. What does that mean? We actually send you what trades that I'm doing. What you've been looking at the entire time here, okay, these are portfolios. These are portfolios that you can gain access to. You don't just see the portfolio. We send you a text message. We send you a push notification. When I trade the portfolio, you get pushed a notification. When I trade the portfolio in, whether it's out, when these things make 50%, you get pushed a notification. When I execute into a new trade, you get pushed a notification. All of the following are alerts. All I'm going to do is just show you, okay, about 18 months of returns. All right, and I'm starting in 2021. I'm just going to show you about 18 months of returns, and then I'm actually going to show you the live portfolio. And you get to see, by the way, the trades that you're looking at right here, You're like, what are you looking at? I know it says bond, but it doesn't matter. In fact, I moved to the bond because it doesn't matter. Look, this is all the way back in January of 2021. This is the exact time I placed the trade. This is a sell to open. This is the product, which is a ZB. This is the strike price. This is a put. These were the, the trade. This is the actual price I sold it at, the price I bought it at, and the return. Okay. Everything is delineated for you. This is a Tesla trade. This is the opening trade, the closing trade, the strikes. This is all the way to 2021. It's a 58% return. Where are these from? Okay. Those, when I say what is that, where is that from? That's actually from thinkorswim. As I said, I give like a no holds barred look. Okay. At everything we do. I don't care. I'll go back 360 days and I'll show you everything that I did in the ES. Okay, I'll show you everything I did in the ES over the last, there's 107 fills. You know what this is in here? This is what we could term, okay, the Ultima Theo Theta portfolio. It has every trade that I've done, but I thought that this was kind of overwhelming to look at. Again, I show you every single trade in here, right? It's overwhelming to look at. So what I did is I broke it down and just copy and pasted those trades into a spreadsheet. Every trade that you're looking at are alerts. These are trades that have not just been placed. And again, every trade that you're looking at in here, right, is a trade that was placed. These are the executions. Like, look, this is my account. All right, 360. By the way, I can go any date back. I can show you all the way back to 2021, but this is 2022. I can show you every trade, every opening, every closing. Okay, you name it. It's actually all in there. Everybody good? Because it's important that, look, there's no hold barred approach is critical. Bond short put, 57% return, 53% return, IWM, 62% return. I'm just going to scroll through here. Okay. I want you guys to see what the returns happen to be. QQQ, IWM, IWM. And again, we're just scrolling through. Look, there's a 19% loss. Loser. Right. And I start to scroll through, right? You're like, oh, this is rather mundane. Here we are. Okay. In March. I don't want to spend forever on this. I just want you to see. As I said, this is like a no holds barred approach. And as you start to get more astute, as you start to actually learn, you don't trade the smaller products. We start to actually amplify it up a little bit. We start to look at stuff like ES. ES is much bigger, 50% return, 50% return, 50% return. By the way, you see anything like almost unnatural about it? I'm just like 50%, 50%, 50%. Okay. Oh, look, 51%. Oh, look, 51%. Oh, look, 50%. Oh, 51%. Okay. And again, I don't mind. I'll bring up the actual execution on the trading application. You can see everything. And as you get a little bit more astute, then we start bringing in trades like Christmas trees. What's a Christmas tree? It's a 1 by 3 by 4 by 5. You want to see a Christmas tree in action? Okay. Here's a real Christmas tree. When I say a real Christmas tree, this is a 1 by 3 by 4 by 5. That is a premium selling strategy. That one's not for the faint of heart. That is a big boy trade. Doesn't look like it, but that's a big boy trade. Even one of these, okay? $21 credit. It's huge by huge. You'll learn how to do all of this, but you don't have to learn because you can actually sit there and just take the trade alerts, right? Still scrolling through, seeing every single trade that we're actually doing. We're still in 2021. Look at this 92% return. Okay, now we're into 2022. By the way, oh, that's a big one. Christmas tree spread, we actually hit. It's $4,000 of P&L on one unit of the trade. Okay, just going through. And here we are, another Christmas tree, $1,000 return. Okay, and right there, it should cut off. And you go, what happens? What happens? Well, that was 18 months of returns. What happens after that? Number one, I was really bored of like copying and pasting my trades. Number two, I thought it was actually okay to come in here. And if you don't mind, I'm actually going to show you just a live portfolio. This is TheoTrade. Okay. Welcome to TheoTrade. It's the Ultima Theo Theta portfolio. It shows you all the open trades. Okay. Everything that's open. Look, to close, 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 open, open. Okay. And then on the bottom, all the closed trades. Right? And this is the exact prices. So you get to see every opening trade, every closing trade. And we put it, okay, and we're like, why does it look like that? It looks weird. Like, why is it weird? Because you can actually copy the trade. I can't copy it when I'm live. I can copy the trade, right click, go copy, and I can actually paste it directly into a trading application. The open to close. Now this is the bigger of the portfolios. This is a portfolio, and everybody's going to ask, how did it do last year? I'll show you in a moment. But if you're not comfortable with the bigger portfolio, we have what they call Theo Theta Small. Okay, what's small? It's the Ultima Theo Theta Small portfolio. Small. What does small mean? It means an account that's like $5,000. You can actually do this with a $2,000 account. I actually showed you that portfolio a moment ago. And this is the micros. And you don't have to have but $5,000. You go, what happens if I have like 20 grand? If you have 20 grand, you just do 4 of everything I do 1 at. Okay, somebody was asking me earlier, what do I do? Okay, why am I doing a 1 lot here? I'm doing a 1 lot here because I'm in a $5,000 account intentionally so you can follow it. But if you have a bigger account, you can do 4 contracts, right? So you can follow anything you want, okay? Look, what I'm showing you today, everything is not only displayed live at TheoTrade, every trade I'm showing you was texted out, okay? Everything we're doing is very set and forget, it's hands off. And the biggest differentiating factor, okay, we started providing real-time trade alerts. And this is something that, I always wanted to I like teaching this stuff, and I do. And we give you the classes to learn how to do this stuff, okay? But in this market, in this volatility, I think it's okay to say look, just follow what we're doing while you're learning. I think it's essential to do that because the market right now, okay, it got real. It's unforgiving. It's unrelentless. I just don't want you to have to sit there freaked out all day in front of the screen and be like, oh, relax a little bit. We give you real-time trade alerts, okay? And we actually have duplication. And when I say duplication, not only do we use text messaging, but we also do push notification. So we built our own app on both Google, okay? And of course, Apple. There's a TheoTrade app. So I say it's duplication. I'm emphatic about trading. I've been around it my entire life. I carry my phone everywhere, but I actually wear the watch because the watch is will tap me on the wrist when I have a fill. So I'm working orders, okay? And I'll actually, by the way, somebody say, can you show a typical notification? I'm actually going to show you that in just a moment. I mean, look, markets are going to be in bouts of volatility for years. Right? Selling premium is a wonderful hedge for recessionary times. And, I hated, I actually put that line in there the other day. I hate having to say that, but wake up. What do you think the Fed is trying to do? Okay. The Fed's trying to push you into a recession. They don't like to say that either. It's going to be just a little bit down and then maybe a little bit up. Okay. But they don't like to use the word recession. Selling premium is the hedge for recessionary times. Maybe you don't have the time to learn a new skill set. That's not why we're doing just the real-time alerts. I just came to the conclusion, it's on, man. What are we going to do when the S&Ps, look at this, the market's swinging around 60, 70 points a day, but it's in a 100-point range. It's okay, this marketplace, it's chaos. It's chaos in a bottle, okay? It's not safe out there. And I'm actually going to be managing the risk on the real-time trade alerts. I think it's important. Okay, what our members are saying. I want to say thank you again. You taught me a lot in the last 2.5 years. I bought into, which taught about risk twist spreads, duration positions. I missed out on the last market move up. At the time, my IRA is up 14.8%. By the way, this is just in March. Okay, to be up 14.8% by March 16th, I think it's pretty good. TheoTrade's been so worth the money. Look, characteristics of selling this. As I said, you don't have to buy or sell the stock. You're never going to use a stop order. It's a great strategy to enhance a stock portfolio. The probability of profitability is high. Okay. New products, as I showed you in micros, you don't have to have a big account. You can do this in any size account. And again, it's a tool to build portfolio. Look, if you're new to options, do not let the options portion of this intimidate you. Let the alerts do the work for you. Options, the one thing I always tell people about options are the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market, okay? But you have to learn how to use them. The alerts, okay, are going to make that world so much easier. You can initially do this for minimal credits and minimal risk. Look, you need the strategies for the foreseeable future. And we can show you how, okay, and when to do this in literally in a matter of hours. But more importantly, that's why we're now providing the alerts. This is what you need to know to successfully sell Ultima Premium for a living. You got to know what underlying stocks or indices make the best candidates. What candidates did I use? I use the same thing every single time. I go back to the spiders, the ES or the MES and this, you don't see anything crazy in here. One thing I think that's an imperative to understand, you don't see me doing anything crazy. And what do you mean you don't see me doing anything crazy? Am I out there Okay. Am I out there, slinging stuff and like, oh, I'm going to do Tesla. Oh, I got to trade one of those banks like Wall that's going out of business. Okay. Going out of business sale. All right. Like, I'm not trading anything like that. This is about consistency. It's about just being able to make money. What volatility should I seek out? Too much volatility, you're dead. You're going to get crushed in here. Too little volatility, you can get crushed in here. You don't see me trading any Walmart, do you? Okay. What options expiration do I select? This question came up a little bit earlier. I saw it. And somebody said, what expiration? Do I always do the 105 day? No, you don't always do the 105 day, but just to make a quick point, have you looked lately? Have you looked like this is the spiders? Look how many expirations there are. There's like 50 different expirations. Do I always wait for 105 days? Can I do the 133 day? Can I do the 77 day? You can see I've got inventory all over the place, right? I have inventory all over the place, and that's important, okay? What should be the delta of the option I sell? Which option do I sell? What's the probability? What should be the delta of the option I buy? How many hedges do I do? How do I build the position? When I'm talking about building a position, it's like I sell a bunch of stuff here and I sell a bunch of stuff here, but how many hedges do I need here? How many hedges do I need to hedge this and to hedge this? We do all of that. That's what we do here. Okay. Do I need a large amount of capital? No. Okay. What's the right amount of risk for you? We're going to dial that in. What are the percentage returns supposed to be? Correct me if I'm wrong, but I think it's 50%. How do I protect myself from market crashes? We're going to use a number of different strategies. Lately, I don't mind saying, lately I've been using the inflection point spread. An inflection point spread, it's a really clean, very, very clean hedge and very, very aggressive hedge. Okay, not just anticipating a market crash, but going out there and saying like, hey, I'm aggressively hedging at this point. Okay, let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading, recipes with definitive criteria, step-by-step, how to get in and out of every single trade. More importantly, and more appropriately for this market, now we give you real-time trade alerts. As opportunities arise, we execute upon them, real-time trading alerts. Trading's all about answering the what ifs. What might be a good stock ETF? What's the correct options expiration cycle? How much capital do I commit? What strike options do I sell? What strike options do I buy? Can I limit my risk? We have the answers. As I said, we build recipes with definitive criteria. They're literally checklists for each strategy and each unique variable. Our checklists, okay, in our classes, and we do classes, but in the classes, the checklists are just like if you entered the cockpit of a 737, the first thing the pilot does is goes through a checklist. They don't just go throttle up and take off, right? They go through a very detailed checklist. And once they're in flight, then they're actually looking around, okay? They're like basically a human checklist. Do I do this? Do I do this? What happens if they actually encounter any trouble? The market goes down, okay? Evasive maneuvers, we have those steps. That's what the checklists are, okay? And now we're taking TheoTrade completely a step beyond. Welcome to Ultima Alerts, okay? Ultima Alerts is actually us texting you using push notifications while we trade. TheoTrade is the answer to the questions. We give you the right probability. We give you the option contracts. When do you close the premium sell? What if we sell off big? Do you bail out of the trade? What if we rally massively? Cannot fix a losing position. It's how, it's when, it's where, it's at what price. All of it are factors that you're going to face, okay? Variables you're going to face while selling Ultima options for a living. Look, you can read about what selling premium is. Like a lot of people, they'll go out there and they'll Google selling premium. Like after this today, they'll Google selling premium. I'm going to tell you right now, you can Google everything you want. There's 10,000 pages that are going to pop up about selling premium, literally 10,000 pages about selling premium. You're not going to have criteria, okay? Where does the criteria come from? Basically 25 years of my experience, of which 15 years that experience, okay? We had the largest order flow in the entire industry, bar none. Okay, thinkorswim and TD Ameritrade had more options, order flow. We know exactly what works and what doesn't. Okay, a lot of you already know how to build a few trades, but I'm telling you, okay, you're not going to be able to Google how to actually go out and sell Ultima Premium. Look, we need TheoTrade's alerts. You need TheoTrade's experience, access to client order flow for 15 years. Okay, viewed and studied millions of trading accounts, and I ran education at both thinkorswim and TD Ameritrade for the better part of 15 years, right? Ultima Trade Alerts is your recipe for success, okay? The following strategy and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning the trade setup, fine-tuning the criteria, and now are providing real-time alerts at the convenience of any mobile device, okay? This is the Ultima income generator alerts. Now, this is still TheoTrade. The only difference is now we give you alerts on top of it. We are giving you access to the Theo small portfolio. I manage it. We are giving you access to the Theo Theta big portfolio. I manage it. Alerts for 3 months is $297. By the way, there's no if, and, or but about that. And I'm going to throw this out there right now. It's a full money back guarantee. I don't care. Try it out for 3 months. If it's not for you, get your $300 back. It's $300. Okay. There's over 6,000 people using it right now. We're fine with that. We're absolutely fine with it. We're fine with people trying anything out. It's text and push notification. But at the same time, you also get access to everything that TheoTrade has done, okay, since we launched in 2016. You still get all the classes. You still get the chat rooms. And by the way, I want to, give you a little tour of TheoTrade because it's $297. And I say it because it's nothing. It's $297 for 3 months. By the way, I want to make something very, very clear before I go any further. That is not an introductory price. After 3 months, what do you pay after 3 months? You pay $297. And when I say there's a money back guarantee, that's for today. If you sign up literally today, the only way we give you the money back guarantee, that's the incentive is today. Why do we do that? To incentivize people. I mean, sessions like this, they cost us a small fortune to put on. Okay, so we incentivize you. Go to theotrade.com/SKU. It's S as in Sam, K as in kick, E as in echo, W, theotrade.com/SKU. You can enroll for $300. Again, I'm also going to show you in a moment. Anytime in the next 90 days, and I'm not even showing you the money back guarantee yet because I just want to make sure everybody understands before I even get there. The next 90 days, okay, you don't like it? $297 is yours. You don't have to call us. Don't even bother calling us. Just send us an email. Okay. We would rather you try it. Okay. And try it. You'll like it. We'd rather you try it out, see how it is, see if it's for you. Okay. I can't tell you that everything is for everybody. I can't. I don't think that that's fair to do. One size here does not fit all. See if it works for you. Okay. See if you like it. Some people like, oh, I need more alerts. Look, the alerts, they come out periodically. Sometimes you go like 10 days with no alerts and all of a sudden, bam, 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 I do like 5 trades. It is what it is, okay? So you got to wait a little bit, you got to get used to it. But for the next 3 months, you'll get alerts and you have access to everything. When I say access to everything, and I want to be very, very clear about this, we still give you access to everything that TheoTrade does. What does TheoTrade do? This is a chat room, okay? It's live, all right? When I say it's live right now. All these people are in a chat room. You still get access to all of the other portfolios that are in here, okay? In-out spreads. You get all the Ultima portfolios. Everything is in here for you, okay? You get access to the member chat room, which is right here. You get access to all the archives. What's in the archive? You want to see the classes archive? Probably the most coveted archive ever in this industry, okay? I'm going to make a quick argument here. You could go out and you could spend legitimately $50,000 in stock market education, and you're not going to get what you can get in here. And all of these have criteria. So option classes, option newbies, technicals, futures, bonds, stocks. It's overwhelming, right? Okay. I told you, you come here for $297. All right. You still get access. Look, you want to learn everything about Ultima? It's right there. Ultima, income accelerator, inflection point spreads, catapult trading. Catapult is awesome. Like clearly my favorite. Of course, I haven't told anybody like the artist here that that's a slingshot, but it's catapult. I love catapult. Okay, flyby, Z spreads. You get access to all of these. This is just the archive. This is just the archive under options. Okay, it's sick. Like there's nothing. Again, go out, spend $50,000. I'm telling you right now, what we do here at TheoTrade for $297 is smoke it. I will put that up against anything. That's why we do a money back guarantee on it. So go to theotrade.com/SKU. In fact, to enroll for it, as I pop the address up there, and then I'll talk about the money back guarantee on here. As I pop the address up here, okay, there are 30 riskless spots for today. 30 riskless spots for today, all right? Click add to cart. When you click add to cart, okay, I also am going to show you something else that I think is incredibly important, okay? You don't even have to go out and pay the entire thing right now. And we do this because some people are like, look, I still get the money back guarantee. I'll just do 149 and do it whatever way you want to do it, okay? We don't care. Look, we are here to introduce you, okay, to effective trading and effective trading skills. It's whatever you want, come as you are. The only thing I ask is put a phone number in there, put a valid phone number in there, because the phone number is critical to us sending you text messages. If you're out of the country, we do text into Canada. Okay, we have a text provider in Canada, but if you're out of the country, living overseas somewhere, it's fine. Okay, use push notification. And I will answer every question here momentarily, but I wanted to make sure that everybody understands. Go to theotrade.com/SKU, enroll right now for it. We give you 30 riskless spots. Okay, and I'll tell you again, there's nothing in this industry like what we do here at TheoTrade. Nothing for 297 bucks. And again, the chat room, the everything else. Okay, here's what you get with Ultima alerts. I'm the trading instructor for it. It's a positive portfolio. It's Ultima premium selling. It's totally no holds barred. Okay, you can see everything we do. Full disclosure: opening trades, closing trades, hedging positions. You get to watch us like never before. By the way, I'm live every morning for an hour in the morning too. I like doing it. You know, one of the reasons TheoTrade kind of got started is I was after TD Ameritrade. I didn't work for a while, and I would just like sit at home and had a microphone in front of me, and like I'd be yelling and screaming like the mic was on, but it wasn't. And my wife's like, she's like, you should turn the mic on one of these days. People would love to hear what you had to say. And I'm like, really? I have no idea, but that became TheoTrade. But you can watch us discuss and trade positions. We even do updates. Every Friday, I do an update on the portfolio. And we have a TheoTheta large portfolio and a TheoTheta small portfolio. You get access to both of them. And both of them, okay, have alerts. Now, here's the riskless trade. This is today. For those of you that are like literally enrolled today, there's a money back guarantee, okay? Because look, you can go to our website, oh, it's 300 bucks, whatever. Enroll today because you get 90 days, okay? Money back guarantee. And this is for the first 30 people that enroll today. Money back guarantee stipulations. Let me make something very clear. There's no stipulations, okay? And I want to make something very clear. There are no stipulations. Why do I say that? Because, like you used to have to do a little dance, make a little love, get down tonight, and there's stipulations. By the way, the other thing is, like, you don't have to send us like certified mail to get your money back. Forget all that crap. Please, we don't want you to even call us. Just send us an email. You don't have to give us a little excuse. There's no excuse, no questions, no commentary needed. If you don't like it, like the one thing I am so adamant about, okay, at TheoTrade is like, look, we really want people, okay, that want to be here. I know that sounds unusual, okay, but when I say that, like, I mean, we mean it. Like, we want people, okay, that want to be here, that want to be in the trading environment, that enjoy this stuff. Like, if you don't want to be here, it's okay. We'll give the 297 bucks back. It's not a lot, right? There's 6,000 plus people on the site, so we're okay. And the other thing is this: on the after 3 months, everybody always asks this question. Say, after 3 months, do you guys automatically bill me? And the answer is no. Okay, auto renewal. No auto renewal. After 3 months, what do you have to do? You have to sign up again for 297 bucks. You don't have to fill anything out. You just say yes or no. All right, we send you an email. Say, yeah, I want to do that again. That was the greatest thing I've ever done. Okay, it's important to us. Okay, it's really important to us. Oh, people want to see some of the returns. I'll get there. Okay, I'll get there right now. Anyway, the Ultima alert is there for you. You guys can enroll for it right now. I'm going to answer a couple of questions. Again, it's to the convenience of your phone. We can shoot this to an iPad, any Android device, obviously an iPhone. I don't go anywhere without a watch these days. Okay, I know it sounds ridiculous, but it's the best. I think you can buy a watch now, these Apple watches, for as low as like 200 bucks. You don't even have to buy an Apple watch, any watch. And it literally taps you on the wrist. It's like, it's time to trade. These are the portfolios, okay? This is actually the 2022 Ultima portfolio return. This is the return on the Ultima TheoTheta, okay, account. So this is based on a $50,000 portfolio. So this is the Ultima TheoTheta large. It's a 56.6% return. It made basically $28,314.75. I never had more than $17,000 allocated at any time. I never had more than $17,000 allocated at any time. And that's it. Okay. So that is the return on the bigger of the portfolios. The smaller of the portfolios mirrored this, but slightly underperformed. Okay. Why did the smaller portfolio underperform? It was very, very new. It was new to me, it was new to them, and the product itself, the micros, are rather new. So this portfolio outperformed, okay? This is a weekly update video. Every single week, we update you, okay, with a video, meaning that how long is the video? It's about anywhere from 10, okay, to 12 minutes. We update you on every move that I make. It's easier than me answering 500 emails about why did I do this and why did I do this? I give you a 12-minute video, basically updates you. I just recorded them right before hopping on here. Okay, this is what an alert looks like. Somebody said, can you give me an idea what an alert looks like? Yes, this is exactly what it looks like. Okay, 3,400 puts, 4,500 calls, okay, for a net credit. All right, and then you can see this is a closing position. So you can see to open, it'll say to open, to close, all of it. Okay, all of it is actually in here. So Ultima TheoTrade strategy, ES, opening order, okay, closing order. Let's actually move to the next slide over here so you can actually see again. Here's another one. This one actually came out in February. I just figured I'd pop that in there. Closing for 50% profit, leaving the hedges on for now, okay? This is actually, again, this is a closing order. And yet again, let's show you one more trade in here, okay? Here's another one. This is buying back a 2-lot, work orders aggressively for a fill. By the way, when I'm saying work orders aggressively for a fill, that means hit that position. Hit the position and hit it hard. When you actually see aggressively for a fill, basically means we're in the middle of some serious crap, and I want people out. I don't care whether it's in or whether it's out. Like, I want people to know what aggressively means. I tell people that from this day forward. I don't use the term aggressively lightly. Okay, when I'm getting aggressive on filling, I mean, look, if you can't get 950, work that order. Work that order, change the price, do what you have to do. Okay, I'm saying it right now because this was a closing order, and I'm like, get out of the rock. We were like wildly profitable in a really crazy day. So, and yet another one. So here's an opening order. Opening order. Okay, there's part 1 and part 2. Part 1 was an inflection point hedge. Part 2 was the sale of premium. It's 1 against 2. Kind of cool, right? So this one actually comes out in 2 texts where you fill the hedge and then you can actually fill the trade. I would never go unhedged. So you can't do part 2 until you've done part 1. Okay. All right. What our members are saying over here, the first educational trading service that I'm actually making a profit with, and one which I can see a pathway to retirement, comes actually from Pat earlier this year. By the way, year-to-date profit has paid for my yearly TheoTrade subscription. This one actually comes from Jeffrey, obviously recent. Okay, this year I did more of what works and less of what didn't. Okay, thanks to your selling premium and inflection point hedges, took 12K to over 32,000 in 18 months. Doing your method, thanks so much, comes from Jeff. Look, actually we have 30 spots open today, so I do apologize. Okay, there are 30 riskless spots. Okay, and again, we take this pretty seriously because, you know, again, it's a no stipulations money back guarantee. The other thing is get ready for text messages. These are some phone numbers that you may actually see on your phone. The only reason I throw this up here, don't ever freak out if you see a 340 area code. That's St. Croix. Okay, it's the Virgin Islands. I shouldn't say that. It's not just St. Croix. It's St. Croix, St. Thomas, St. John. You only need one area code here, right? You probably only need one zip code here too, but it's 340. Don't freak out if you see that. If you go to theotrade.com/SKU, you can enroll. By the way, I will read off a few names of those of you that are enrolling right now, and then I'm going to answer some general questions for you. This is just an individual, Robert, that was saying how wonderful the support is. One thing we also kind of pride ourselves on is the support and support staff. And Brian Aponte, who's actually live on this particular webcast with me right now, Brian Aponte is our support. And, you know, even like what I'm pointing out here, okay, Brian Aponte, this last Friday, getting started with training videos, I ran into a technical issue at 3:45. He sent an email, okay, and with your closing time of 4 p.m., I thought I would have to wait till Monday. At 4:10, Brian actually called him. Like, we're really, really into support. So let me answer some questions for you. By the way, I'm going to read off a couple of names for those of you so I can confirm that you've actually enrolled for it, so you can confirm. Here's actually a handful of names. I don't want to butcher this first one, okay? Niranj. Did I get that right? Niranj from Connecticut? Niranj B from Connecticut. And tell me yes or no if I got the pronunciation correct. okay? Because I'm trying to do the best I can. So Neeranj B from Connecticut, Troy W from Illinois, Scott B from Arizona, Lawrence S from Florida, Jeffrey P from Oregon, Jonathan P from Tennessee, Temin T from Florida, okay? Ronald B from Texas, Linda S from North Carolina, Robin S from Georgia, Daniel B from Mississippi, Cheryl M from Colorado, William D from Oregon. I'm just reading off the first couple of names over here, okay? You know what? Somebody actually asked a great question in here, and I want to actually start with this. So by the way, I just read off about 12, 15 names. So we have 30 riskless spots available today. We opened it up. We have a lot more people attending live today than I expected. There's actually a great question that came in, and this is the one where I got to start with this. Say, can you teach me how to fish, okay, for my own fish instead of buying the trade alerts? What you are getting here at TheoTrade, and it's important, it is just that, okay? We have already been doing the trade alerts. We never really sent these to the masses. We never felt a need to do it until the volatility hit. So we are every bit about education, and everything that you are getting here is the education. Every single day, we are in there for 6.5 hours a day educating people. That's the member chat room. Our archives, okay? We have 7 years of archives. We have every class imaginable in here. Like seriously, if you want to learn to do this, watch the Ultima Income Generator class right here, and then watch inflection point spreads, okay? And that I think most effectively answers the questions, okay? Push notifications, how do push notifications work? Push notifications work, okay, through our application. You're going to go ahead and download, after enrolling for TheoTrade, you're going to download a TheoTrade mobile application, okay? And then on the TheoTrade mobile application, right, you're going to come in under settings, and you make sure it actually defaults to this, but you can actually come in here under settings. And again, I'm just messing with my own right now. And you can enable push notifications. And in doing so, all right, you're good to go. That's it. I mean, there's just push notifications. So it's basically, it's our app that allows you to receive push notifications. And one of the things is our app defaults you to push notifications. You would actually have to go in, and this is on Apple specifically, but you would have to actually go in here and actually turn them off if you wanted them off. But if you want to see what push notifications, I know this disappears because I have green screen working. Okay, work. I know it's hard to see that, but the push notifications, they're all just in there. Okay, and you would have to actually go and turn them off. So I hope that helps answer that question a little bit. People always ask me some general questions, and I'm going to answer some more specific. But oh yeah, somebody said, how much? Can you tell me how much risk per trade? I'm going to come to that in just a moment. All right. Next thing over here, let me just answer some of the first 10 general questions, and then I'll come into your specifics. What do you need to get started? We have everything you need to get started. You don't even need a laptop anymore. You just need like a mobile device, and that's changed a lot. Like you need a mobile device. You could have a laptop, any mobile device, any iPad will work, because you can actually trade through these. And it's so weird when I hold it off to the side. Can't see it, can see it, right? You can trade through your mobile device, and they're really good now. This is not a membership. We don't auto renew or auto bill. I always say that. We're now providing weekly updates, TheoTheo weekly updates. That's the update of the portfolios. So you can actually see like, how's the portfolio? What am I doing in the portfolio? All of that's in there. Look, number 4, we give you access to TheoTrade mobile. You get push notifications. Add your cell phone number when enrolling. That's important. Like I always forget to mention that, and now I'm mentioning it like 5 times and probably annoying you, but you click add to cart, and when you're actually filling this little form out, make sure you put your phone number in there, because it'll automatically put you into text messaging. But then you say, look, Don, I live down in New Zealand, Australia. It's fine. By the way, we have brokerage firms we work with pretty much all over the world, literally actually all over the world. So there's, even Canada, I say even Canada, okay, it's all over the world. Canada is always a challenge, but we have brokerage firms we work with everywhere. Number 6, you can email us anytime, receive a response within 24 hours. One of the things I'm also emphatic about is, email us trade-related questions. I don't think I put too much emphasis into this, but most of us here at TheoTrade, we've held every license imaginable, meaning like we know how to answer your emails. I've held a Series 3, a Series 4, a Series 7, a Series 24, a Series 66. You want fries with that? I've managed over $400 million at the beginning of thinkorswim, and then worked more on the education side and software side of thinkorswim for a lot of years. But yeah, I'm totally familiar with that. And we know how to answer trade-related questions. So you don't have to say, my dog's roommate's friend asked this question. You can ask it right out, like, can I do this trade? Number 7, variations of all the trades are available inside of an IRA. One thing that's also really important, okay? Trade with us, and okay, this is important when I say this, when you're trading with us, okay, you can do every trade that we do inside of an IRA, and that's important. And you go, well, my brokerage firm doesn't allow that. We'll help you get a brokerage firm that will allow you to do anything you want to do. That's actually number 8. Remember, now there are 30 riskless spots. There are 30. We bumped it up because we have, by the way, we're getting close. We probably have like 24, 25 people that are already enrolled right now. By the way, it takes me, and I apologize, it takes me about anywhere from 4 to 6 minutes before I see your name actually pop up on my screen after you enroll. Okay. So look, get results, take action now. I mean, there's nothing else to say other than, look, we want people that want to be here. It's theotrade.com/SKU. So I will pop the enrollment page up over here again. By the way, if you're looking for the link for the auto expected move indicator, it's in the bottom of this page. That's literally in the bottom of what page? theotrade.com/SKU. You just go to this page. For those of you that are enrolling, you just simply click add to cart, fill out the form, and you're good. And again, there is a money back guarantee on there, and I'm also emphatic about that. The other thing that I want to reiterate, we do not charge you again unless you want to be charged. Okay, this is not like a gym membership where you like have to give blood to get out of the gym membership. That's not what we're about. It's just not what we're about, right? Andrea said, how often do you post the hedges? Okay, hedges typically come out, it's about once a month. It depends on what I'm doing, but hedges typically come out about once a month. The hedge that I'm using, okay, most often right now is approximately a 35-day hedge. It's called an inflection point. The inflection point hedge lasts about 35 days. The only caveat to that, Andreas, the only caveat to that is when the crap is really hitting the fan, we do what's called a hedge displacement. Displacement is when I actually pick up the present hedge, shift it lower, okay? So if I have to displace a hedge, and that can only happen maybe once or twice a year. Last year was wild. I think I did 3 displacements all of last year. So I think that probably okay, answers that. All right. John Smith said, I get a message that you'll open a prohibited position. Okay. So John, yeah, your brokerage firm's not going to let you do this. Either that or you're not approved to do this. We, and I even put that in here, we at TheoTrade, okay, will get you approved to do this. So we'll walk you through that. It's not any great shakes. Okay. Do not be afraid. Do not be afraid. Most of the brokerage firms, okay, these days, look, they removed all the restrictions and all the rules about what you can and can't do in your account. But most of the brokerage firms don't even adhere to the newest rules because they just don't care. They don't care. It's what it comes down to. We are and do work with a handful of brokerage firms that let you do basically anything you want. I mean, we're pretty tight with, TD Ameritrade, which is obviously purchased by Charles Schwab. We still use it. Okay. Obviously, we use Tasty Trade. We have relationships with E-Trade. So, I mean, there's no other education venue out there. If you look at this, if you actually look at TheoTrade, there's no other educational venue that has this many brokerage firms listed on it. And there's a reason for that. It's because look, we're the what these brokerage firms want. Okay. Let me see if I can answer a few more questions. We're going to kind of wrap things up. Okay. All right. Regina Sue G from North Carolina. Okay, I just saw that name actually pop in here, so apologize if I didn't read your name off a little bit earlier. Okay, I'm just making sure they're getting all of these questions answered. Okay, by the way, yeah, you'll have access. Okay, you'll have access to everything. All library of charts, scans, studies. We give you access to everything in here. Okay, somebody said I'm not allowed to trade futures in my account. We can get you that. That's not a problem. Okay, everybody's a little bit different. Everybody's situation is a little bit unique, but we can get you actually approval for whatever you want to do inside of that account. Just be open-minded to. I don't know exactly what country you might be in, but certain countries, different restrictions. We'll talk you through it, walk you through it. Not a problem whatsoever. So I want to thank each and every one of you for attending today. Again, all you have to do to enroll now is go to theotrade.com/SKU. There is a handful, okay, just a handful of spots left over here. Again, come in here, click add to cart, and be sure to put your phone number in there so we can text message you when the alerts are out there. Thanks everybody for tuning in. And again, welcome to TheoTrade.